Hey everybody, welcome to the live stream. Today is Tuesday, July 21. Every day is a beautiful day, right? This channel is all about option selling puts, selling covered calls, and just doing it over and over and over again. If you're doing it right, this is not really, I'm always excited about this stuff, I have to be honest with you, but as you're doing this, and if you're doing it right, it's not necessarily like an exciting thing. It's more like you're just doing the same things over and over and over again. Sometimes it can be a little monotonous. I encourage everybody to fight the urge of trying to, let's say, let me just stuff as many trades as possible in there because it's super cool and super exciting, because we don't know when a stock is going to dip. So we want to make sure that we stay appropriate to our account size. That's the most important thing. I would say, if you're not sure, if I'm not sure if I should sell one contract or two contracts or whatever, I sell one. I think it's always better to err on the side of being conservative, because it's really easy to make money and it's harder not to lose it. And there's never anything wrong with just making small bits of money over and over and over again. That's option selling. So yeah, if you're new to the channel, welcome to the channel. It's super exciting. I run these live streams every weekday, and I go through a real account, and I not just to look for the trades or put the trades on, but I want to show you the management of the trades, because that's the most important thing. After you put a trade on, what do? Sometimes you want to close it, or sometimes you should close it. Sometimes you should add more to that position. And so that's the advantage of walking through a real account, kind of going through that with you guys live, step by step. And I use my app. The app is super cool, and this guy said this morning, and this was interesting, he said something like, you're not selling a subscription, you're selling a business. It can be a business. This is a business of creating yourself income. And guess what? When you sell options, you are not tied to hey, I got to be somewhere, I got to jump in my car, take a shower, jump in my car, and be somewhere at a certain time, or I got to do this at a certain time. It's all on your schedule. I get this question so many times. I wish I had a nickel every time somebody asks me this question. A very common question people ask is when do you put your trades in? Do you sell puts on red days? Do you sell calls on green days? Do you sell options after the market opens or after lunch or whatever? And the fact is, you could do whatever it is that you want to do, but the way I do it is I trade options whenever it fits in my schedule. So recently I haven't even been trading. I've been focusing super diligently hyper-focused on enhancing this app. And so, and doing a lot of these YouTube videos. But really, when you're trading, do it when it fits your schedule. I don't ever set an alarm clock. I just kind of wake up and I do what I want to do. Man, life is short and life is a gift. And I'm a big believer that if you're not doing exactly what you want to do, you're doing yourself a disservice. So many people that I talk to on a regular basis, so many, it's not even, it's unbelievable sometimes when I think about it, are not happy with their life. They're not happy with their job, or they wish that they can retire, or they don't like their spouse, or they want to move. They don't like where they live, and all these different things. I'm a true believer. Your life is whatever you make it be. And if you want to move. If you want to quit, you can quit. If you want to retire, you can retire. And options can help you do all of those things, and do it on your own time schedule. So it's super, super cool. Friend of Bill, life-changing. I think that's probably the most appropriate way to say it. Life-changing. Once you go options, you never go back. And really, the people that are just old school, buying stock and hoping, praying, waiting for their stock to go up, looking at their statements online, or when they receive their statements in the mail, that is so old school. And number two, more importantly, that is a fundamentally broken system, because you can't spend any of that. Who cares what you create on paper? Who cares if I buy some Apple stock at $100 and then 5 years later it's at 300? Did I have the advantage or the ability to spend any of that cash? Cash flow is king. Somebody wrote on my YouTube earlier today, I think, something about cash being king. Cash is king. Like, cash flow is what sustains your life. It's what can change your lifestyle from where it is now to a different lifestyle that you would, can only dream of. And if that sounds like pie in the sky stuff, it is not. So that's why I get super excited about it. So that said, we always want to focus on realized gains, right? So we don't really care so much. Somebody sent me a text earlier this morning about NAV and, how does that work? NAV, you'll see on your account as, or sometimes it might have a different term, net asset value. It's kind of like, okay, how much is your portfolio worth? And that number reflects this. If you were to liquidate all of your positions, how much money would you have, right? That's what that means. And if we go to my positions page, for example, I'm gonna drink some coffee as I'm talking to you. I drink so much coffee every day, so much. So as an example, let me go to the right one here. Right now, the NAV, net asset or net liquidation value of this account is net liquidation value, net asset value. It's got lots of different terms. How much is your money worth? What's your account value, right? 76K. Well, guess what? I started this account with 100,000. Am I freaking out because I lost 24 or 23%? No, because I care about how much cash I created out of this account. And so this app kind of keeps track of so many things for you. Here's your positions and here's your realized gain loss. Realized gain loss is the most important thing. I have lots of different test accounts in here, so sometimes I have to flip back and forth. But your realized gain is the most important thing. Why? It's because that's the cash that you put into your pocket, right? How much cash did you put into your pocket? So, for example, let me just make sure my numbers are correct. Sometimes I see some things that I need to, bugs you might say, bugs in the code that I have to walk through. I'm not sure why these numbers are different. I'm going to go with the lower number for now. I think it's the higher number, but I'm just going to show you illustratively, how much money have you made, right? So that's important. And then it's important to kind of look through, okay, well, what are my trades? What are the top trades that made me the most amount of money, okay? When I first started this account, I bought Avgo right off the bat and sold a covered call against it, right? And that shows up as my top trade because I brought in the most premium. And remember, when we're talking about options, when we're selling puts and we're selling covered calls, when we take the premium in, there's a couple of things that you want to be that you want to recognize. Number one, that money, man, hits your account right away. So you hit the trade button and that cash gets dropped into your account as available cash. Number one, you're not compare that to the stock trader, right? I'm going to buy 100 shares of stock because I think that thing, let's use SpaceX as an example. Oh my gosh, it's the biggest IPO in history. Now I want to premise what I'm going to say is I'm a big believer of Elon Musk. Tesla has been long time one of my actually the favorite stock that I've ever traded for many, many, many years. So I like Elon Musk. I love Tesla and I like SpaceX too. But I'm going to pick on SpaceX for a moment because so many people say, oh my gosh, the biggest IPO in history, right? It was literally the biggest IPO in history. It made Elon a trillionaire, the first trillionaire on the planet. Amazing, amazing stuff. But here's the problem when you're only buying stock. You buy stock, it drops, and now you have a paper loss, right? It doesn't really mean anything. And then it goes up, and then maybe it turns from a paper loss into a paper gain. All of that is paper. Who cares about the paper? I care about the money in my pocket. You know why? Because I want to do stuff with that money. I want to go to the store and pay for groceries. I want to pay for my car payment. I want to, take my kids out to dinner. Whatever the case is, there's so many things that you spend money on, and you can't spend money with paper gains, right? So that's why realized gains are the most important thing. I don't really care about my total portfolio value. The only time you ever care about that is really in a couple scenarios. Number one, if you're in a situation where you needed to access part of that money, then you want to care about that. So for example, let's say you put all your money, 100% of everything, you don't have any money in savings or anything like that, and you put all your money in a brokerage account. and then an emergency happens and you need to access capital. Well, then you're going to care about this number, because you might have to, liquidate a trade and lose money on that trade. So that's number one. So you don't want to keep all your money in a brokerage account. Sometimes people say, well, how much money should you keep in a brokerage account? I'm a big believer mutual funds suck. Mutual funds suck. Trading stocks without trading options sucks. So I'm a big believer, like, keep some cash for a rainy day. Like, I don't know, what if something happens? It depends on your own scenario, right? There's different, like, rules of thumb. Keep 6 months worth of expenses in a savings account, that kind of thing. Whatever works for you. So keep some money liquid, right? In case something happened and you needed money for something. I don't know, your kid gets arrested or whatever, your car breaks down or whatever that scenario is. You need cash, right? So you need a little bit of cash. But everything else, I'm a big believer, man, don't trade mutual funds, goofy mutual funds or goofy stock. Trade options on everything, because the advantage is that it gives you the ability to lock in your gains and then not give that back to the marketplace. So that's, like, super, super important. All right, friend of Bill, my favorite one. My absolute favorite on here. I've been trading yesterday morning, $1,100 in 45 minutes selling puts and calls. This is a real business. And that's the other thing. So first of all, thank you for saying that. And secondly, it's totally true. You don't need to spend that much time. Listen, you don't need to be, like, looking at computer screens. We are not, like, trying to directionally trade. Like, hey, I think that stock's going to go up, or hey, I think that stock's going to go down. No, we're not doing that. What we're doing is we're finding opportunities and capitalizing on them. I'm going to give you an example. This is one of my favorite things in the platform here, Earnings Edge, right? And so I can, I'm going to type in a custom ticker because I did a screen this morning, and then I started sending out an email blast to all the people on my list. And by the way, if you're not in my email distribution list, I haven't done a lot of marketing. Not marketing like for money necessarily, but like sending content to people. I haven't done a lot of that, but I am committed to start doing more of that moving forward. So, like, for example, this morning I sent an email. I ran a scanner, and there were so many great opportunities. Actually, I'm going to show you. I'm just going to run a scan now, and you're going to see all the great opportunities come up for tickers that have earnings coming up. And the reason why they're great opportunities is because when earnings is coming up, the volatility is higher. We're paid more. And it's not about, like, let me take a lot of risk for a lot of money. It's not. I'm going to show you exactly. I'm going to walk through it with you click by click, and I'm going to show you what I'm talking about, right? So this kind of pulls up, oh my gosh, here's some great opportunities that you can take a look at to maximize your income. Now, the first one on the list is the one that I sent an email distribution out this morning. And if you didn't get that email and you are on my list, I didn't send it to everybody yet. I have like a few thousand people on my distribution list, so I didn't send it to everybody at one time. I do it in batches. And if you're not on my list, you can become on my list. It's free anyway. Just go to Cressivo, my website, and Inner Circle is what it's called, and join. So you put your name and you put your email, and then you become on my distribution list. But anyway, going back to Bloom Energy, I did a video on this like a week ago or so, and it did come down a lot since then. But here's what this shows you. Okay, like, first of all, earnings is July 28th, so it's coming up in a short period of time. Right now, Bloom is at 225, and by the way, I think it's up like, I don't even know, I was looking at this earlier. It's up 14% today. I mean, it's been down a lot the past few days. Look, it kind of dropped like this. But let's go back to the, I'm running some prompts with AI as I'm talking to you guys. Let's go back to my page here. This shows you a few things. Number one, right off the bat, it shows you what is the expected move that the market anticipates that the stock is going to go. Now, this is a big number, 33%. So this is saying, based on the numbers, the price metrics and such, the market expects this stock to either go up 33% or down 33%. So it's got a lot of volatility. In fact, if we look at the implied volatility of the stock, it's over 200%. It's got lots of swing, right? Historically, what I'm doing with this app is I'm putting all the relevant stuff because I don't want fluff, right? Like this is kind of like, remember when you're in school and you could either read a book and do a book report, or you can get the cliff notes. I'm all about the easy way because I don't want to be spending all day looking at investment stuff. Now, I do like this investment stuff, but I want to do fun stuff. Like I want to go, it's sunny out. I'm in Los Angeles. I want to go hang out at the pool for a while. I go to the gym in the morning. I want to go to the store because I moved into a new place. I need some pieces of furniture, that kind of thing. I want to go do stuff. I don't want to be like looking at computer screens all day. So I try to give you guys, and I try to give this app, and believe me when I say this, I created this app for me. I created it like thinking, okay, over the past 29 years, what is it that I would find the most valuable in seeing, in automating, in pulling up automatically for me? And then if I'm using it, hey, why don't I just share that with the world, right? Now I can't share it for free. A couple of things why. First of all, people don't value what you get for free, number one, and number two, I have like over 2,000 hours into doing this and costs, like hard dollar costs in setting it up and that sort of thing. Just in case you were wondering why. And then also, like getting back to over here, we have the market expected move, and then we have the historical move. Well, where historically has this ticker gone after earnings? So we have a number of 33% that the market is anticipating, and we have a historical number of 10%. That means we have an edge, right? So here's our edge, 23%. That's good. So this is pulling up all like the best of the best trades. Again, you got to do your own due diligence, right? But these tools help you identify things and manage them. I'm just talking about the identify part right now. And then it kind of shows you this other box that's super important right here. How many times did it go up versus how many times did it go down? I want something historically that's gone up more because I'm all about like likelihoods, right? Like I don't like Vegas anyway because I don't like the vibe, the energy in Vegas, and I don't like gambling. Like because when you go to a casino in Vegas or elsewhere, like the odds are always against you. I want the odds for me. I'm more of like I want to be a casino house, or I want to be the insurance company, not the gambler. So I always want something that, it's gone up more times than it's gone down. Now that doesn't mean it won't go down because it has gone down, right? And because we expect it to perhaps go down a chunk. So here's the other thing that's so fucking amazing on this app. Because we expect the stock to go down, let's say 33%, if we were to sell a put, we want to go below that 33% measurement. Now, you can do all this stuff mathematically yourself, like with a spreadsheet and a calculator, and look up a whole bunch of different sites and that kind of thing. Or you can press a couple of buttons and it shows you on the fly. So it shows you, okay, well, if you were to sell the July 31, 149 put, because that's below where the market anticipates it to be, right? Here's the premium. It's paying $900 right now. 900 again gets dropped into your account. How much money do I need for the trade? Well, I need 14.9 if I'm putting up all the cash. And by the way, if you want, you can use margin. You don't have to put up all the cash. I'm not going to talk a lot about margin in this session, but you can use margin. And the biggest reason why I started creating this app is because I personally have historically used margin my whole life. And I've blown up a few counts. In fact, I not blew up, but I lost a chunk of money last year from using margin and not having enough things in place to be able to quantify and identify these things. That is really what drove me to like, hey, let me take a moment, let me take a beat from trading, and let me start creating this app that I've been working on for the past 5 years, that kind of thing. And let me just go full force. So this shows you all of this. And what's my annualized rate of return? Listen, so many of you guys put trades in and sell a put and you don't know what your annualized rate of return is. You're doing it blindly. You have to calculate that ahead of time. And you have to calculate it on an annualized basis because you have to compare an apple to an apple. Like if I compare this trade, let's say to trading SPY, I want to be able to easily see, okay, this pays 221% and SPY pays 8%, whatever the number is, right? Now, here's what I look at when I see this, and I'm going to get to some of the questions in a moment. Number one, right off the bat, oh my gosh, 221%. That's a massive number. So it makes me pause, is there something that I'm not familiar with? Maybe I don't know about. Sometimes I spend some time Googling a stock. I look at I look at follow the whales over here to see insider transactions. Maybe a bunch of people are selling a bunch of stock, right? And also what I do is this. I say, okay, this is a 149 put, but what if I even went more conservative? So let me go to the trade builder as an example, right? And let me put Bloom in here. And let me look, I was looking at July 31st as an example, and then I can select my own strike, right? So what strike were we looking at before? Oh my gosh, it just fell out of my head already. I think it was somewhere down here, 160 I think it was. So let's say I wanted to even go more conservative. Let me look at a 125, right? Or let me go even more conservative. Let me go to a 115. Right, so I'm going to click evaluate. It pulls us in like fractions of a second, right? So if I was to sell a 115 put, that's paying $289. I need 11.5K if it's cash secured, and I'm making myself 91% annualized. Now here's the worst case scenario when I sell a put if the stock goes down. Dude, worst case scenario, you're going to buy a stock that theoretically you like anyway. And listen, by the way, when I say you like anyway, you should only be doing this on stocks that you like. Don't be like attracted, by this number here. You have to say to yourself, okay, like Bloom Energy, I like that. It's got some AI exposure. Here's what I like about it, blah, blah, blah. You have to walk through that. So assuming that you want to make this trade and you like the ticker, you can actually also, let me go a little more conservative. Let me go to a $105 put. I don't know. A $105 put is paying $192. Like, man, first of all, check out this number. It's got to drop 53% to require you to buy the shares, right? And worst case scenario, you buy a stock that you like anyway on sale. And then once you buy the shares, you turn right around and sell a covered call. A lot of you guys are scared of assignment. It's interesting. I put out a video today, and it hasn't even gotten many views. I don't know how the algorithm works. It was my video I put out. I recorded a whole bunch of them over the weekend. Should you roll a covered call? A lot of you guys, and I have another one coming out in a couple of days. Should you roll a put? A lot of you guys are afraid sometimes of being assigned. Assignment is not a failure. It's part of the process working. Like, this is like a wheel, right? And a wheel is like circular. And what does it do? Like, it goes like this, right? I sell a put. If I get assigned the shares, I sell a covered call. I make more money again. If those shares get assigned, it's all good. I sell another put. Rinse and repeat, rinse and repeat. It's the way that you can capitalize on creating income for yourself on a consistent basis. Where else can you do that? Like you can make money in real estate. I've done real estate before, off and on. And it's good. Like, you can make a ton of money, but it's got a lot of like challenges. I don't know about you, but for me, like, I had my places in the Virgin Islands, and I got like contractors that don't show up, or the cleaning lady doesn't show up, or this Airbnb guest, something happens and I got to deal with that. There's a lot of work associated with that. But this, it's like you and your laptop. Like, I just got my laptop on the kitchen counter here, and that's it. And nothing else gives you, in my view, the ability to do such a thing, to make money on a regular basis. So Noodle Brain says, with the account being so down, does it make it difficult to continue making money? Or making income, rather? No. So here's the most important thing. You got to make sure that you're not sizing your positions too big. So it will be difficult to continue making money if you took the wrong trades, or if you sold too many contracts, or you own too many shares of something. Then yeah, your life is going to be difficult. But what you want to do is you want to make sure that your position sizes are consistent with the account sizes. So here's the rules of thumb that I use. I look at, and we're gonna have a hard close at 12:30. So anybody who's got any questions, stuff them in the comment section now, because we got 6 minutes. In the meantime, I'm going to tell you how I look at that. I only trade a handful of things, 5 tickers. I think I did a video on this yesterday, or maybe I got one coming out the next couple of days. I forget, because like I said, I batch recorded like 8 of them recently, and they're really good, by the way. 5 tickers. You do not need 20 tickers. And in fact, if you're trading 20 different things, you are doing yourself a disservice, because first of all, you cannot keep track of 20 things. When is earnings? What do I got to know about that? Blah, 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 all these different things. It's too much like nonsense. I want to say too much shit in your head, right? Like if you got too much stuff up there, it's hard to keep track of what you got. Number one. Number two, and probably more importantly, you need cash on the side to sell another put if your stock drops. So for example, if I sell this put on Bloom Energy and I take in this cash and then Bloom drops from, what's this put, 105? Let's say it drops to $50. I'm not going to freak out and say, oh my gosh, my stock just dropped, 50%. I'm going to embrace that opportunity. That is how everybody makes money when the market goes up. You can be like not smart at whatsoever and not have any good habits and not even know whatsoever what you're doing, and you can make money when the market's going up. However, like when the market's going down and you have like proper rules in place and you're trading the right way, that is when you make a lot more money, right? And so 5 tickers. So Jot Jot says, I like that name, by the way, Jot Jot. 5 inverse tickers. I mean, I would say not necessarily, they don't have to be inverse necessarily. It is good to have uncorrelated things. So when we think about like having 5 of something or 20 of something, we do want to think not just diversification, because diversify, like let me stuff a bunch of things in my account, doesn't really mean anything. Like sometimes one stock goes up, they all go up. Certainly if you're trading in the same sector, that's more common. But even if you're not trading in the same sector, a lot of times, one part of the market goes up, if the market's going up, kind of everybody floats up. The tide rises, all boats rise to the top. It's kind of like that scenario. I do look at correlation. So correlation a little bit different. So correlation is kind of like, okay, is something correlated or is it non-correlated? Sometimes like we say inverse, let's say bonds and stock are inverse generally. Like bonds go up, stocks go down, and vice versa. Sometimes commodities will be a non-correlated asset. So to have some sort of commodity type exposure in your account is usually a good thing, because then it's not correlated to everything else. So when I say 5, ideally you would have some that are not correlated to one another. So good question, Jot Jot. So going back to 5, so keep 5, don't keep 20. And then also you want to have cash on the side. You do not want to be 100% invested, because when markets drop, and they drop all the time, tickers drop, that's the function of the market. Listen, it boggles my mind how people don't understand that stocks go up and down like all the time. Like it doesn't matter the reason why. It doesn't matter. 99.9% of the time, it has nothing to do with the actual company. It's still the company that you liked when you traded that stock. There's nothing different. It's just, something happened in the environment that drove stocks down. Ultimately, stocks go down because massive amounts of people sell and push that stock down. So it doesn't matter. And if you like the stock at, let's say 100, man, you got to like it at $50, and you got to have cash to capitalize on those opportunities. So that's super important. So hopefully that answers your question, Noodle Brains. Also, it is true, as something comes down, you're not able to sell a covered call, right? And sometimes you can't sell a call because it's not worth that much money. That's why you need that cash on the side to sell a put on that same ticker. And then first of all, you're creating cash. And secondly, if you do get assigned, you're buying more shares and averaging your cost down. Also, I want to say this, a couple of things I want to say before I forget. I've gotten a couple of requests. I used to have this app where there was a free 7-day free trial, and then I got rid of it and changed the pricing. And recently I had a couple people reach out. What about the trial? What about the old price? Blah blah blah. I went back to the old price and the trial. So thanks for I'm an Aquarius, so Aquarius is like change your mind a lot. I did go back to 7 days free. If you've never used this, this app before, try it out for 7 days. See if you like it. Click through all these. I have office hours every Saturday morning where we walk through the functionality. It's amazing. It will like totally blow your mind. And for $100 a month, you can literally make, 500, depending on how much your account is, of course. But it's meant to drive multiples in income off of that by helping you find and manage trades on an ongoing basis. So anyway, it's 12:30. I don't have any other comments here. I hope this content helps. Let me know if there's other stuff that you want to see or talk through. The time goes by so quickly. So sometimes I do talk a lot, and I talk fast. Sorry about that. Watch the video again in slower motion if that's helpful. And catch me tomorrow at the same time, 12 o'clock. And catch my new videos because I am committed to I like doing that one a day because it gives me momentum, right? And yeah, so they're going to be coming out daily for you. Anyway, thank you for watching. I'm wishing you guys all amazing success. And stay in the channel here, and I'll see you guys tomorrow at noon. Cheers for now.